Hey everybody, so I just wanted to make a very quick video today and I'm just going to get straight to the point. So when we're looking on SPY and I introduced the moving averages, you can see that today's price action, we actually got above both the 50-day and the 200-day all in one go. And what makes me a little bit worried is that the volume here, and this is quad witching, mind you, so the volume here should be much bigger, but it was only 106 million versus the average of 113 million. So to me, this is just a little bit weird. And I also do want to point out that the dividend, the ex-dividend date for SPY is also today. It's $1.36. So we might see this reflected in the price on Monday. So don't be too surprised if you do see SPY fall down on Monday. It's just reflecting this dividend payment. So one thing I do want to note on SPY is that the volume was low, and let's just look at the day. So on the day, you can see that there are these block cells like that right there, that right there, and then you could see these pretty big buy orders as well. So all in all, I would say that there was probably more buying today, just given that very end of the day, that ginormous candle right there. So more buying on SPY. But I also do want to point out something else. So let's just look at the Bollinger Bands. Let's take out the moving averages. Look right here, when I zoom out or zoom in a little bit, you can see that we actually broke above the Bollinger Band. Now, the Bollinger Band is basically saying when you're above this, we're overbought. When we're below this, we're oversold. And this is especially true on the major indices. You can see that when we broke below this, we were seriously oversold, and we're due for a relief rally, which we saw right here. But right here, now we're overbought. You can see that we're actually peaking out of this. So generally, when this does happen, you see some sort of sell-off, and it doesn't have to be a big one. It could just be a small sell-off, just a cool-off, basically. So here, I'll actually go and show you some examples. So we could go all the way back here. This is right at the end of 2021. We saw that we hit the top of this Bollinger Band, and then we saw this massive sell-off. Right here, this is in November. You can see November, we had that rally. We hit the top of the Bollinger Band, and we sold off again. We actually fell below the Bollinger Band, and then we rebounded. Now, this is the one situation where this actually kind of breaks the rules here. So you can see we hit the top of the Bollinger Band, but then we just continued to go back up and straight up, and we're just constantly messing with the top of the Bollinger Band. So this situation could happen with what we're doing right now. But also keep in mind that here we didn't go up as fast, and we actually had these dips down here. But in this situation, we're just going straight up. So here, the volatility is actually pretty wide because the Bollinger Band is wider. So the wider the Bollinger Band, the more the volatility. So right here, we're actually at the top of the Bollinger Band. So just given the volatility that we have, we could fade quite a bit if we decide to cool down. And then right here, you can see it again, faded. Right here, faded. Right there, faded. Right here, we just kind of hug it for a while. So you can see it's not always the case, but generally when you do peak out a little bit, you see a sell-off. So right here, we do peak out a little bit. And then right here is actually a different situation. We actually peak out of it, and then we go flat for a few days before we rally again. I would say more times than not, when we do hit this, the top of the Bollinger Band, we do sell off. So here you can see it again. And then right there, right here as well. And then this is kind of like a more extreme example. So this was back in 2020. And you can see that this move down was actually about like 10 points right there. Right here as well, also in 2020. So this was more in like the correction territory. So this is probably a better example. So this was September of 2020 was the last time SPY actually had a correction. So you can see it actually started out with this massive rally. We broke out of the Bollinger Band, and then we just sold off completely. And then here we had this rebound rally, and we are just going straight up, broke out again, and then we sold off, and then we did this W shape right here, so double dip before we rallied out. So this was in a correctionary situation, which is what we're in right now. So I mean, take this with a grain of salt, but we are overbought according to the Bollinger Bands. But according to RSI, not as much, just because we sold off so much. Now, I do want to point out something in XLF. This is the financial sector, and you can see we left this massive gap here. So there is a chance that we could get filled on this. So this has just been going straight up since the rate hike news, and we could essentially fade about $1.50 on XLF. So this has the potential to bring SPY quite a bit. We could bring SPY down quite a bit if we do go back and fill this gap. So let me just zoom in on that gap. You can very clearly see it right here. And the NASDAQ, you can see with the NASDAQ, we're basically at the 50-day moving average, just a few cents away. So 351.86. So essentially 36 cents away from the 50-day moving average. What we're going to have to see some continued bullishness is us break above this 50-day. So we already did that on the SPY. We broke above the 50 and the 200. So I do think we could see a break above the 50-day moving average here. But do be cautious just because we're very close to the top of this Bollinger Band, and just the sell-off could be pretty big. Just that relief sell-off from all this buying pressure. So if you're bullish, I would probably want to trim a little bit here and then wait for that dip to go and buy some more. And I do want to point out with XLF, when I throw on the moving averages, we're also right at the 50-day. So we're 2 cents away from the 50-day moving average here. So say XLF decides to reject the 50-day moving average, I do think that's when we could see that gap fill. Now, last but not least, with the VIX, you can see we broke underneath the 50-day on the VIX, broke underneath the 20, and now we're about to test this 100-day moving average. But what I think is more important is this trend line right here. So you can see last time we touched this trend line, we had this massive rally. So I think it's very methodical that somehow we closed right here on the trend line. Like, I don't think that that is coincidence. Just given how much we rallied today, I would feel like we should have broke underneath this. So to me, this is a little bit worrisome. But for me to really be bullish here is I would want to see this break underneath. And when we do break underneath this area and we start retesting these lows at around 1921 underneath the $20 area, I would want to probably pick up UVXY. So just as a hedge, I think it'd be a fair idea to pick up UVXY. Around 14 will probably be a decent area to start picking up a little bit, and then just kind of ease into it as it falls down to this $12 area, because we don't know what's going to happen come April. So with April, we have probably the biggest inflation reading we're going to get just because of the war and everything. And we also have earnings, and we don't know if earnings is going to be good. And earnings is generally at the end of April. So there's the saying, sell in May and go away. So, we could rally all the way into April, and then we could sell off pretty big in May. So I just kind of want to show you on the S&P 500 what that sell-off in May looks like. Let's go back to the last May we had, which is right here in 2021. And let's introduce the Bollinger Bands again. So you can see here we just did this straight up rally. And this rally really started, when the beginning of March. So that's when we truly sold off. And then we just rallied straight all the way into May. And then here in the middle of May almost, we just finally peaked out of the Bollinger Bands and then we sold off. And we actually peaked underneath the Bollinger Band when we sold off as well. So this could be a buying opportunity potentially, but it all depends on what the news is going to be and how earnings is actually going to play out. So do look out for that sell in May and go away, because I do think that it'll probably be a stronger one if we're rallying right now just from oversold conditions, and then we go into bad earnings on top of high inflation. So watch out for that. And I think that basically covers everything. I hope this helped you guys, and have a great week.